tell the people what is an SBA loan.
So SBA 7A loan is specifically what we use to go out there and purchase self-storage facilities. So when you think about FHA, right, you got to do 3.5% down, is tailored towards new home buyers. The SBA 7A loan is tailored towards newbie self-storage investors, right? So all you got to do is come to the table with 10% down, and the SBA will guarantee the loan. And a lot of people get it confused because they think that the SBA is the lender. No, it's you have a lender, but the SBA is going to guarantee that loan. You come to the table with 10%, and they'll finance the rest as long as it makes sense and it hit that debt service coverage ratio.
And what debt service are they looking for SBA?
1.25.
1.25. This is definitely hitting way over 1.25.
Oh, yeah. This
is definitely over 1.25. Yeah. Wait a minute. Hold on. So you did an SBA loan, $750, 10% down, 75 bands, plus closing. Let's just call it 100 bands. Mm-hmm. And that 100 bands is netting you $60K a year profit.
Yep.
Fuck a multifamily.
Why you think I'm here?
What we talking now?
Why you think I'm here? That's
how to make
a
fortune off of storage facilities. Wait a minute. Hold on. Because I just did that math in my head real quick. And I'm probably a little off by $1 or $2. But, yeah.
Yeah. And now I don't have to deal with the headaches of somebody calling me at midnight talking about the kitchen sink is clogged or the toilet is clogged or the neighbors upstairs is too loud. I don't get those phone calls, right? Like that's really why I'm in it. I'm gonna be honest with you because, you know, being in the residential space, in the apartment space, the multifamily space, I made good money in it, but I was a slave to it, to be honest with you. Even though I had property managers, you still got to answer. You know, they still got to answer to you.
You got to manage the property managers.
Exactly.
Yeah.
So I basically got a day job at this point, right? I'm getting my cash flow, but I'm still kind of hands on in the business. So for me, self-storage was a way for me to. I still manage the business to a degree, but not as much. I could spend more time growing different ventures and being able to have time with my family and just kind of spread myself to do a little bit more with my time.
This is interesting.
Yeah.
So you got the SBA loan, 10% down. I know your interest rate is probably lovely.
Yeah, the interest rate.
What is it, like probably 4% or something like that? Because SBA is always lower.
Yeah, it's a 4.25
on a 20-year.
20-year.
So you got a 4.25 on an SBA loan. The government is your partner. You use OPM from the government.
That's a fact.
Got an amazing interest rate. Your cash flowing ridiculous. I mean, $60K.
So I want to take it a step further for you.
Keep
right?
going.
I want to break this because I teach how to do this with no money down, period.
Okay,
right?
Let's talk about it.
And a lot of people, they think that you need to have a bunch of money because that's what you've been told. And I'm living proof of it, right? When I told you my first deal, I put no money out of my pocket. Yeah, I gave up 50% equity. I'm cool with giving up 50% equity if I don't have to put no money out of my pocket. So that $100,000 roughly that you have to come to the table with on the SBA loan, I raised that from private investors, right? So what I do every single year, I have what I call a family legacy meeting. So I bring my aunts, my cousins, my uncles, my brothers, my sister. I bring everybody in the room, and then we talk about financial literacy strategies, right? My cousin, he works full-time job. He's a correction officer, right? So he works 60, 70 hours a week. He's a responsible person, pays bills on time. That's all he knows, right? With the family legacy meeting, I make sure that before you come to the meeting, you got to make sure that your credit reports is pulled up. You have to make sure that you have your LLC. I get you set up before the meeting. So I had my cousin, and a bunch of people come to the meeting, right? And I looked at my cousin's credit profile. He had an 800 credit score. Didn't even know it. He's like, damn, I didn't even know I had an 800 credit score. I just pay my bills on time. Like I'm responsible. I said, yo, I want to show you that you could go get business credit or business funding. He said, what's that? So if I put you on my business, you can apply for business lines of credit, and then we can use that money to invest. I put him on my LLC, got him approved for $45,000 in 24 hours. What you think he said next?
Let's go.
Let's get more.
Yeah.
Like, let's get it, right?
Yeah.
So I said, cool. I just wanted to show you how this works. And then now I set him up with his own LLC. Obviously, it's steps that you have to put in place to make sure your business is set up the right way. But we went through that process, and now he got a $250,000 in 0% interest business credit cards, right? So I used some of his capital that he'll invest to partner with me. He lend out of his 401k, right? Because that money is just sitting there. And the stock market taking a beating, 401k taking a beating. You rather invest that money with me because you're going to make a better return. So now I raised that capital from my cousin, put it down on on a facility, and now I get from returns out of that 5+ K net that we make every single month. I'm giving him a percentage of that. But I'm not making all the money, but I don't have to spend any of my own money. I have a strong relationship now. I have a lender that's willing to do the exact same things, and we continuously build like that.
Capital stacks.
That's a fact.
Capital stacks. So you're using OPM to the fullest.
To the max.
To build your storage facility portfolio.
Yep.
That's incredible. That's incredible. So raising capital is the name of your game.
That's a fact.
Using everybody else's bread and using as little as possible as yours.
Mm-hmm.
I like that family meeting, the legacy meeting, and making everybody pull their credit.
Yeah.
Like, I think that's a great idea. I think everybody should do that.
It's a great idea. And because a lot of times we get stuck, right?
Mm-hmm.
You know, we coming up from the hood and we trying to get things started. We want to get into business and we hold ourselves back, not knowing that it's information out here that could change our lives. So if you get the information, I was fortunate enough to get the information, I invested, I took that next step, I bring it back to my family. Not everybody is jumping on board, but the ones that do, you put them in position and you teach them, and now we continuously do that same process and we go from there.
I like that. So let's get back to SBA real quick.
Yeah.
Right. What's the process of SBA? Like, how do you get approved for an SBA loan?
Great question. So, and I'm gonna be 100% real, right? Like, I'm gonna give you 100% transparent information. Yes, the SBA, they'll give you a loan, but you only have to come to the table with 10% down. However, you need to make sure that your documentation is in order, right? So they want to see a business plan. When you go and you looking to buy that facility, they want to know what are your plans with that facility, right? How do you plan to market and increase the revenue? What different streams of income will you generate? So we want to make sure we have a business plan. That's number one. Number two, we need to make sure that we have, our personal finance statements, making sure that your asset and your liability column is, your debt to income ratio is not bad. And you being in the mortgage industry with the SBA, they do 50% debt to income ratio, which is very generous.
Very generous.
Very, very generous, right?
Very.
So just making sure that your credit profile is in position, you have the capacity to borrow, that you can afford this, have a business plan, fill out the necessary documents, right? Your business profile needs to be clean. And that's pretty much it. You go through that process.
Mm-hmm.
They're gonna send out the appraiser to make sure that the appraised value is there. But yeah, that's how it goes.
How long did it take to get approved for this SBA loan?
To get the commitment, it took about 45 days.
45 days for the commitment.
It took a little minute to get the
Okay.
commitment because it was my first time, mind you, and I had to get all the documents, right? They said, oh, I'm sending documents in. It's like, all right, come back. We need this as well. All right, go get now I'm working with the seller as well because the seller has to give me 3 years tax returns. Now they got to dig in their backyard.
So SBA want to see the seller's information
they want to see,
too.
Yeah.
Mm-hmm.
They want to see what the business is doing because essentially SBA, you're buying a business. That's why self-storage qualifies for the SBA 7A loan because you're buying a business that has real estate attached to it. So that's why we want to see what the business is doing as well, and then we're going to add the real estate and appreciation. You'll add that as well on top of it. But it's really, what is this? What is the cash flow? Is this business healthy?
Yeah, is this a viable business for them to kind of partner with you with?
Facts.
So all right, so you go through that. It takes you 45 minutes to get 45 days to
get the commitment, closing maybe 60 to 90 days.
So about a 90-day close, give or take, low interest rate, and now the government is your partner.
Facts.
Basically, OPM, and you got some of the cheapest money that you can get for commercial real estate. Now you went through a little pain, because going through any type of government funding is not going to be easy.
Yeah,
but you got to stick to it.
Yes.
So if you were to give people 3 tips if they were going to apply for SBA loan, what would be the 3 tips?
Great question. So I would say number one, you want to make sure that you have bookkeeping. So as a small business owner, a lot of times we don't manage our books. So you QuickBooks, Wave apps, whatever you utilize, make sure that your books is in order. So when SBA asks you for a P&L statement or a balance sheet, you can go and get it. You don't have to make something up and pull it out of nowhere or be stuck in the deal. So I would definitely say have your bookkeeping in order to make sure your documents is available. Number 2, I would say make sure that your credit profile is clean because, they're going to look at your character, the credit profile. And then number 3, have a game plan. Right, just because they're gonna ask you questions. And be honest with me, I like working with the SBA and lenders in general because they have your best interest at heart because they're giving you the money. So if the deal doesn't make sense, they're not gonna approve it. If my lender not approving the deal 9 times out of 10, I don't want the deal because if they're not approving it, that means it's not a viable deal. Exactly. So, that's what I would. That's the 3 tips that I would
You
give.
using the bank to help you analyze too, because if they don't like it, then you don't like it.
I don't like it if they don't like it.
Yeah, you need the
fact.
money.
Yeah.
Now, can you get multiple SBA loans?
Yeah, you can get. So they approve you from 350,000 up to 5 million with the
Okay.
SBA 7A loan. So you can buy 5 facilities for $1 million each, or you could buy one $5 million facility, but it caps at 5 million. After that, you will have to transition over to the 504 loan, and that goes up to 20 million. So, once you tap out of the SBA 7A, then you just transition over to 504, and after that, then you have to just do conventional banks and things like that.
So the government will basically fund business owners like yourself up to $20 million if you can scale to that level, basically.
Yes, absolutely.
Incredible.